Today I will be showing you guys how to actually build your structure from weekly, then going into daily, then 4H ranges, and then from there searching how to identify the momentum and jumping in on the momentum. And I'll show you guys a few trades that I took today based on this specific strategy. It doesn't matter if you're scalping, swing trading or day trading, you will need your top-down analysis. So a lot of traders think if they're going to focus on scalping, they only need the smaller time frame analysis, but it's so important to build your core analysis from the higher time frame. So when you drop down to the lower time frame, you already know what the bigger trend is doing, and it's easier to scale in and jump in on the momentum.
Okay, so this is the AUD trade that I took today based on a top-down analysis. If you guys can see over there, I took a short position, closed it out, could have held it a little bit further, but once again, all about risk to reward. So if we look at my pre-market analysis, also had a short position in place, obviously as my online journal, so I know exactly what I'm looking for. Now I can go and backtest and see why I closed the market early, etc. So let's look at AUD and obviously how I got to this specific analysis by using top-down analysis.
Going in the weekly, we obviously want to mark off our weekly range. So weekly high, weekly low, and obviously adding in is the higher low and a higher high, or is it the lower low and a lower high? So if we know the weekly trend, it obviously is really important or easier to understand what we're looking for on the smaller time frames.
So we always start off on the weekly time frame. Weekly is for me once again the first indication of where we're looking to go. Because we understand what the weekly is doing, we obviously know what to do on the smaller time frames. So in this instance, we have that weekly high level over there. So what I would do is obviously say weekly higher high, so just that I know that we are in a buying trend. Then I'll go and I'll mark off our weekly lows over there. So weekly higher low, which is obviously higher high, higher low, looking for a higher low to be formed. So weekly, you can obviously write down that weekly is in a specific buying trend. So let's quickly show you guys how I also find this as well. So we can actually see there we had the lower high, high low, high high, high low, high high, high low, and we've been trending to the top side on the weekly. So the key thing about a weekly level once again is if price stays above that specific level over there, we are still in a buying trend. So the only way we can actually start going into a selling trend on the higher time frames is for price to break through that specific level.
Now that we're done with the weekly, we're going to be dropping down to the daily time frame and marking off the daily ranges. We will also be adjusting the weekly ranges a little bit on the daily. So then we have our weekly range, we have our daily range, and then we'll drop down to the lower time frames.
Okay, on the daily, it's obviously a little bit of a different story. Okay, so once again, if you do struggle, always use this tool. This tool will give you a good indication of what is actually happening within the specific market. So going on the daily, we had that daily low being formed and we'll mark that off accordingly. And then we obviously have that key daily level over there as well. So one thing that we need to take note of is once again the trend and the structure that's currently forming. So there we had a low low, low high, high low, low high. So a little bit of a possible shift of momentum already coming into play, because a lower high is usually a first indication of price shifting momentum. But we obviously can see that we are in a range at the moment, so we're in that weekly range and we're in that daily range. So let's drop down to the lower time frames.
So 4H levels is hardly levels that I enter from. So I see it as continuation level, that's what I call it. So for example, price moves into a key weekly selling area or daily selling area. You're looking for a drop off to a downside, and that's usually where you have that small pullback and that continuation. So I look for a continuation trade from there, and I also use my 4H levels to exit.
Here we can once again see that key daily range there at the top, but we can see price still have some continuation levels from that specific level. So what I usually do in this specific instance is obviously just add my zone over there. So basically add a little bit of an area of supply into that specific range, covering the selling points to the peak of that specific spikes. Okay, then we obviously see there's no specific 4H ranges in that level. There's some buying pressure on that 4H range, but it obviously lines up with that daily level. So there's nothing on the 4H hindering us to run the market all the way down from that level to that key daily level. So we're working on the daily with about a 400 points or 40 pip range specifically. And obviously if price can close through that specific level now, that will give us an indication that we will be continuing. So what a lot of traders do wrong is obviously not understanding the difference between key selling levels and key buying levels. So if price closes below this specific level, we need to understand that price buys from this level, but price sells from that specific level. So a lot of traders will then be looking for retest there for continuation, where price will most probably dip into that higher levels over there and then look for continuation from that specific levels. So let's quickly drop down to the lower time frames and also see how I use the 30 minutes to get my specific entry today.
Now that we finally have our full market range in and obviously our higher time frame top down analysis, we can drop down to the 30 minutes and look for specific trades.
Okay, on the 30 minute, once again, price was reacting from this specific level. We already had that break of structure forming a little bit of a lower point as well. So on the 30 minute, we already had that price coming out of that specific level. So you guys will see if price is in a specific zone, it will form a spike like that, acting as an area of liquidity. So once that liquidity point is taken out, that's our indication that we're looking for sell positions. So that's where you can add your fib obviously from your high to your low, and you can obviously mark off your key selling areas. So there we had a perfect indication of a sell to a downside, perfect indication of a sell to a downside. So we already had the indication, and obviously through market experience, I've seen that usually before we have the actual drop off that goes into new lows, price pushes into a bullish momentum move. So I already took the short position over there because I know that we're forming that lower high on a daily time frame, and that we're looking to move into the weekly time frame to go and retest that specific level. And that is obviously why I was looking for a trade like that. So why did I place my stop loss above that specific level? Because I want to be above this area of supply. So when price pushed against me into my stop loss area, I executed another sell, increasing my risk to reward to a 1-to-4 risk to reward ratio. So I always use my sell limits to obviously enter and execute more trades in that specific range to increase my risk to reward.